Hi, Sophia Polk here. Thank you for joining me today. I am excited to introduce you to Scott Schuveiller with Willow Bend Mortgage. We are going to discuss the top 5 do's and don'ts when applying for a mortgage. They could be the top 5 reasons you do or don't get a mortgage. So listen closely. We are going to discuss these critical points today that you must know. So let me tell you a little about my guest today. Scott has been originating loans in the Dallas-Fort Worth area for 25 years, so he has a lot of experience and has witnessed many ups and downs in the mortgage industry and what could make or break a loan closing. We have critical points that you must know before and during the loan process, and that's what we're going to talk about today.
Sophia, thank you so much for having me today. What a great introduction. I am pleased to say that we have never missed a closing for your clients, and they have all, for the most part, been pretty smooth. I've been originating loans for a long time, and with my experience and professionalism, it has allowed me to help thousands of families live the American dream of homeownership. Since the mortgage crash in 2008, the required documentation a customer has to provide to the lender is very critical in obtaining a home loan. The most recent changes in the industries have complicated the process tremendously. The process to get pre-approved these days can be cumbersome, but if you listen to your loan officer and provide items needed in a timely manner, the process can be much smoother. That brings me to number 1. Get pre-approved so that you can get a pre-approval letter.
And Scott, that is critical, because if I'm working with a client and they don't have a pre-approval letter, they're not taken seriously. If I'm with a seller, they don't know if that buyer can even qualify, and if there's a multiple offer, there's definitely a chance that that particular buyer without that lender letter isn't going to get chosen.
Sophia, to get a pre-approval letter, that really requires you to provide them tax returns for the past 2 years and other documentation. This can be done in less than 24 hours.
It's definitely worth the time invested for a buyer to get a pre-approval letter. Wouldn't you agree?
Absolutely. In this market, you need a pre-approval letter, and that is critical.
Awesome.
The don't to that is don't write an offer without that pre-approval letter.
I couldn't agree with you more. There are so many times when a buyer does decide, hey, I'm going to go make an offer on this, then talks to a lender and finds out that maybe they're $100,000 less than what that home is worth that they can actually get qualified for. So I definitely agree with you on that one.
The next do that I want to talk about is make sure that you keep all of your original pay stubs and other critical documentation that will be required.
So if someone's thinking about buying a home, but maybe not for the next 3 to 6 months, they should start keeping originals. How many months of originals do you need? How many bank statements? How many months of pay stubs?
Typically, we need 2 months of bank statements and 1 month of pay stubs, and they have to be within 30 days of your loan closing. Just keep them until you get closer to your closing date.
Perfect. And what is your don't for that?
Don't make any purchases, whether it's a new vehicle, whether it's a washing machine. Do not make any purchases before or during the loan process.
So if somebody wanted to go out and purchase some furniture prior to the home closing, you're saying that's a don't?
That is a don't, but we can overcome that if they let the loan officer know well in advance of closing.
Okay, so sometimes you can work around something, but a major purchase like a car, where it may be $50,000, that should be a no-no. Definitely
a no-no. And it also can adversely affect your credit score, which then can also affect your loan approval.
I've also heard that that could affect a debt-to-income ratio. Is that correct?
Absolutely. There's many things. So basically, if you can avoid making a purchase, avoid it at all costs.
Okay, wonderful. I had a client a little while ago, and they were approved just at the minimum debt-to-income ratio. So even at the end of the day, their HOA fees put them over, and they almost didn't get approved for the loan because of the HOA fees that needed to be accounted for in their loan. So I could see where a car purchase, accounting for a $500 or $1,000 car payment a month, could put somebody over if a $500 a year HOA put them over.
The number 3 do is to notify your loan officer of any employment changes. such as change of employer, change of pay status, or any promotions that you may have.
Okay, so I had a client who was a nurse, and he changed his job a month before closing, but was a nurse for another company. Or does that adversely affect the loan approval?
It can. Communication is the key. If they're in the same industry, many times we can verify the new employment if we have enough time. So if they make a change, if the customer makes a change maybe a week before closing, that closing's probably going to be delayed. But if it's a month before closing and they change companies, that shouldn't be a problem.
Okay, great. So what I hear you saying is, if at all possible, don't make any change.
That would be best.
Because the investor that's actually purchasing this loan is looking at the creditworthiness of this client to be able to pay back. So I think what consumers need to understand is, even though their lifestyle doesn't change, maybe the same amount of income is still coming in, but to an investor, they may think that they may not be able to pay back this loan if they're making changes or, things aren't stable. Is that correct?
Yes, that is true, Sophia. However, if you're in the same industry and you're only making a change to better your employment, in other words, income or whatnot, then we're okay. But if you're job hopping, that could be looked at as a detriment.
Okay, so that brings me to another question, because I've had a handful of clients talk about their bonuses. They're not part of their income, that they're W-2 income, but they're bonuses that they get. And sometimes there's been a question of whether these bonuses count, whether they don't. Give me an instance of what, people need to look out for with bonuses.
Sophia, that's so true. Bonuses are so different, and they're different in every case.
When someone does receive a bonus and it is considered part of their income, they should be telling you what their W-2 income is and then what their bonus income is separately. What I'm hearing is that might help you with the process of getting them approved.
That would be best. Okay, the next don't is don't deposit any large sums of money without notifying your loan officer.
So if grandma wants to give a gift of $20,000 to help grandson purchase a home, don't do that without your knowledge, correct?
Sophia, that is absolutely correct. Communication is the key. Communicate with your lender. Tell them that, hey, my grandmother's wanting to give me a $5,000 gift for the purchase of my new home. That's fine. There's just documentation that we have to do to provide the right information for the investor and ultimately the underwriter.
Excellent. And every transaction for that 2 months worth of bank statements has to be verified. So the lenders don't want to have big sums of money deposited without having verification of where they're coming from or what is going on with that person's bank statement.
That is correct, Sophia. On your bank statements, if there's any deposits that are over and above your regular pay, they're going to be questioned. Just be prepared to provide that documentation of where that money came from.
I don't know if you know this, but when I made the decision to start selling real estate, I was wavering back and forth between being a loan originator and being a real estate agent, and I actually decided to get my mortgage broker license first. And then I decided that I really wanted to sell real estate. Having that mortgage broker's license was really instrumental in having me understand the process for my clients. And the information that we're sharing today is going to help people, and we're giving this information to them to help them prevent the pitfalls and being at the closing table without being able to get a loan approved. So I think that the information we have today is going to be really helpful to our end users.
Thank you, Sophia. On the next due is to notify your loan officer if you plan on receiving gift funds for your loan closing.
And that makes sense because from everything that we've discussed, the lender needs to verify where those funds are coming from and where they're going to. So if somebody's going to get a gift, the best thing to do is to talk to their loan officer, have the appropriate letter to correlate with the amount, and just communicate.
Absolutely. The gift funds have to come from a blood relative, or a significant other. Next don't is don't open up any new credit cards, lines of credit, or signature loans during the loan process.
Okay, so I had a buyer at one point, He opened up a line of credit a week before closing for his down payment. Needless to say, he did not get the loan. So you can't borrow money from a line of credit for your down payment. It adversely affected his creditworthiness, but then also you can't borrow money for a down payment.
That is correct, Sophia. Point number 5, do be prepared and patient throughout the mortgage process. There's a lot of documentation that is required, and there's a reason for it.
That is definitely one of the things that most of my clients express during the loan process, is they just were not expecting the amount of paperwork, the amount of information, the amount of documentation that it takes. And I've helped explain to them that it's actually been worse in the past, and it's actually gotten a little bit less, but there is a lot of paperwork that needs to be transferred during the process.
The 5th don't is don't procrastinate and think, oh, I'll get it to the lender next week. There are critical dates throughout the mortgage process. So if you delay the lender by not getting him the documentation that they requested, it could delay your closing at the end of the day.
And I couldn't agree with you more, because some of the feedback that I get from my clients is, that is so simple, that's not important, why are they asking me for that? I'll get it to them next week. And getting things to you on a timely manner is critical in getting that loan closed. I try to help people understand that if you don't get it, the loan's not going to be closing on time.
That's correct, Sophia. And we don't try and make the borrower's life miserable by requesting documentation after documentation, but it is for the investor's purposes, and that's why we have to request so much documentation.
I completely understand, and I get it. One of the things that I enjoy working with you and your company is that you have under the same roof your loan processors, the originators, the underwriters, and the funders all out of one office. And that is very unique to a loan officer, because usually if you use a big bank, you're talking to one person in one state, the next person in the next process is in another state, and then it gets funded in another state, and it can be delayed by weeks. And I think that that's something very unique that your company has to offer.
Thanks, Sophia. That means a lot. And we are right off the North Dallas Tollway and Plano Parkway, conveniently located, so we're pretty accessible pretty much all over the Metroplex, so that if people need to drop something off at our office, if they're out of town and they don't have access to their email, or they're coming back from the airport or what have you, they can just simply stop by our office, and we're open all day, every day.
One of the other nice things about working with you, Scott, I have to give it to you, is that you are always accessible to me and my clients when we need a pre-approval letter. And you'll answer your phone on a Saturday, and so many people just don't do that. And I think that the level of customer service that you provide is second to none.
Well, thank you, Sophia. And my belief has always been, if you're working on a weekend, I'm working on a weekend. So I try to be as accessible as possible, and I appreciate your continued support.
I really appreciate your time today coming into our office and discussing these 5 do's and don'ts. I think we have some really great helpful tips to our end users out there. And if they want to get in touch with you, they can call me, they can call you direct. We have some information below that they can click on, and we'd be happy to help them get out there and look for a home, get them pre-approved for a loan.
Absolutely, and thanks so much for having me today, Sophia.
Awesome. Thank you, Scott, for being here.
You're welcome.
Thank you so much for taking the time to watch this video. If you would like to view other helpful tips, click here. If you would like to view a neighborhood we specialize in, click here. And to subscribe and stay updated, click on the circle below. Thank you so much, and have an awesome day.